Gold could be 5,000, 6,000. Silver could be 100. I don't want people to wait and then buy. Buy now, right? Because the longer you wait, the more expensive it's going to be. The debate I want to have with Michael Saylor, and the debate I challenged him to on X, was I want to debate the premise that that strategy is a fraud, that the entire business model is a Ponzi, and that it's destined to collapse, regardless of what happens to Bitcoin. This thing is going to collapse. Now, of course, if Bitcoin goes up, it could go on longer. But if Bitcoin tanks and doesn't recover, then this whole thing is going to completely implode.
In this powerful market commentary, well-known economist Peter Schiff delivers a blunt warning about what comes next for gold, silver, and the broader financial system. He argues that precious metals are entering a phase where prices could accelerate far faster than most investors expect, with gold potentially reaching $5,000 to $6,000, and silver surging toward $100. According to him, waiting on the sidelines could prove extremely costly, as every delay may mean buying at much higher levels. The discussion also dives into a deeper concern: the growing risks inside the digital asset ecosystem. Schiff challenges the structure of certain major crypto-related business models, calling them fundamentally unsustainable and vulnerable to collapse, especially if Bitcoin faces a sharp downturn. This video breaks down why the current environment may be setting a trap for unprepared investors, and why physical precious metals could become the ultimate safe haven as financial tensions rise. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates. And comment below to share your thoughts on it. Appreciate you for tuning in. Now listen to the interview.
Gold may be the only real winner, right? Rather than killing gold, blockchain may have just given it a new lease on life by making gold even more efficient than it's ever been as a medium of exchange, making it more liquid, making it more divisible, making it more portable, right? All the characteristics that people think Bitcoin has that are better than gold are worthless without the underlying value of gold. But Bitcoin can have all of those characteristics, those improved characteristics, if you tokenize it. And again, you don't have to transfer physical gold to use gold as payments. Because when we were on the gold standard until 1971, nobody was handing each other bars of gold. We were transacting in paper dollars that were effectively IOUs for gold in the vault. Gold continues to hold above 4,000, trading around 4,100. It's amazing that people talk about gold being in a correction when it's at 4,100. I mean, it only corrected from a level that it got to for like a day. We haven't spent hardly any time above 4,200. Man, I was 1 or 2 days. That's it. I mean, gold is right near the highs as far as I'm concerned. Same with silver. Silver's at 51.5. Silver is trading above the double top that went from 1980 to 2011. This is a huge breakout. Don't talk about the silver correction because it's not at 54.40, which was the high. It's at 51.5. This is significant. We are now building a base where the support is the old resistance. Bitcoin would collapse. Could you imagine? I mean, it's one thing for the biggest Bitcoin buyer to stop buying. But what happens when the biggest Bitcoin buyer becomes a seller? Look out. So this accident is going to happen. This thing is going to melt down. And that's why people are going to start running away from Bitcoin, from strategy. The whole story is just going to unravel. And I'm watching on, CNBC and Fox Business, and they're all talking about Bitcoin going down. And they're all like scratching their heads like they're at a loss to explain like why it's happening. I mean, duh, it's a bubble. The air is coming out. What makes no sense is that it went up. That's the crazy thing. Not that it's coming down. Explain why it went up, right? These guys think it's real. They think there's an actual business model here. They think these currencies, Bitcoin actually has value. It's got no value. They still don't understand. They've been scammed. They've been scammed by their guests and all their advertisers. And all the OGs and these big whales, they're laughing. They're laughing as they've been unloading all of their garbage, right, on the public. And of course, they got Donald Trump and his family into it and his administration, and that really helped pump it up so they could dump, right? That's why Bitcoin hasn't gone up. All the smart money's been dumping. They've been taking advantage of all this hype in order to unload their Bitcoin. Now, you've got a lot of weaker hands. You got a lot of speculators that own it. And, at some point, they're getting out, right? They're going to liquidate their ETFs. They're going to sell these shares. So I think that this could be the harbinger of other bubbles bursting, like the AI bubble. And we'll see, yes, the futures are way up now because, NVIDIA beat the earnings again, but we'll see if we get some selling tomorrow into this news. If what happened with Bitcoin and the loss of the speculative fever there, if it's got people worried in general about excesses and speculation. Now, again, at least NVIDIA has an actual business. MicroStrategy does not. The whole thing is a fraud. That's why I want to debate Saylor about it. But anyway, moving on. So a couple of other things. We got the minutes from the most recent FOMC meeting that came out today. Oh, and by the way, we also found out we're not going to get the October jobs report. We're supposed to get October's report, not November's. But I think they were supposed to release the October report on the first Monday of December. And then we would have had that report before the FOMC meeting, which is now a coin toss, right, as to whether or not the Fed's going to cut again. Well, the government came out today and said, we're not going to release it.
In this powerful breakdown, economist and market analyst Peter Schiff warns that gold may be the only true winner in the financial storm forming ahead. As digital speculation fades, the conversation turns to how blockchain technology may actually strengthen gold, making it more liquid, more divisible, and more portable than ever before. The discussion reveals why gold's value remains unmatched, even compared to the so-called advantages people assign to Bitcoin. With gold holding strong above $4,000 and silver pushing past $51, both metals are sitting near historic highs. Many claim these markets are in a correction, but Schiff argues the opposite. Gold and silver are building major breakout foundations as old resistance becomes new support. Meanwhile, Bitcoin faces a potential meltdown as major buyers turn into sellers. Schiff breaks down why the crypto price crash isn't surprising, and why the real mystery is how such a speculative bubble inflated in the first place. He also highlights the growing risks in other overhyped sectors, including AI stocks, and questions whether broader markets may follow Bitcoin's decline. With FOMC uncertainty rising and key economic reports delayed, volatility is only increasing. Let's get into the interview.
Bitcoin traded below 88,500. Now, of course, that's still a ridiculously high price to pay for nothing, but it's about 30% below what you had to pay for nothing a couple of months ago. All right, so that is a pretty big bear market in nothing. Bitcoin down 30%. In terms of gold, which again is a better way to measure the price of Bitcoin, because after all, Bitcoin is marketed as being digital gold, as being an alternative to gold that is going to replace gold because it's better than gold. So measuring how it's doing relative to gold makes a lot more sense than just measuring how it's doing relative to dollars. And in terms of gold, Bitcoin was down 42% when it hit the lows. Now, it is rallying. And I think today's rally is another opportunity for people to get out. I think the catalyst for the rally is the NVIDIA earnings, and everything is rallying tech. The NASDAQ futures are up close to 2% on the back of NVIDIA. And, Bitcoin is a risk-on asset, and so it's going up. But what a lot of the, Bitcoin speculators don't realize is it's basically decoupled from risk-on assets, maybe not, on a day-to-day basis. Some days it's correlated. But, earlier this afternoon, when Bitcoin was down near the lows, it was down over 5% on the year. 5%. The NASDAQ was still up 17%. So if the NASDAQ is up 17% and Bitcoin's down 5%, that's not much of a correlation. And so I don't think it really matters that AI stocks are rallying because Bitcoin's got nothing to do with AI stocks. Yes, maybe NVIDIA beat earnings, but Bitcoin has no earnings. So it's irrelevant. But I think the money that is going into all things risk right now, that includes Bitcoin, I think by tomorrow, people will sell, even if they keep buying tech. But who knows? I mean, maybe we'll get a reversal in the tech stocks, buy the rumor, sell the fact, and that'll really weigh heavily on Bitcoin. But also, year to date, gold is up about, I think, 53 or 54%. And Bitcoin's down, was down 5%. And even after this big rally after hours, I mean, it's barely, it's flat on the year. Maybe it's up 1% now, because it's, several percentage points off the lows. We're trading back above 92.
In this final segment, the conversation shifts sharply toward Bitcoin's growing divergence from real assets and the widening gap between hype and reality. After crashing below $88,500, Bitcoin is now nearly 30% off its highs, an enormous drop for something still promoted as digital gold. When measured against actual gold, the picture looks even worse. Bitcoin fell over 40% at the lows while gold surged to new highs. This comparison exposes just how fragile the speculative crypto narrative has become. While tech stocks rally on NVIDIA's earnings, Bitcoin's short-term bounce masks a deeper problem. It no longer moves in sync with risk-on assets, and despite temporary spikes, it remains flat for the year while gold is up more than 50%. The disconnect highlights a major shift. Real value is flowing into hard assets, not digital speculation. As weaker hands begin exiting crypto ETFs and liquidity dries up, the cracks in the story become much harder to ignore. This discussion wraps with a clear message. Investors need to understand the difference between genuine value and temporary excitement. Gold continues to strengthen, Bitcoin continues to unravel, and the market is starting to wake up. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.